Billionaire investor Ray Dalio sounds the alarm on a stock bubble that he says is quickly approaching dot-com proportions. For the legendary investor Ray Dalio, current stock market valuations can largely be traced to two things: high liquidity and low interest rates, which I fully agree with.
Totally
the
agree.
fiscal and monetary stimulus measures from the federal government and the Federal Reserve over the past year in response to COVID-19 are propping up valuations and encouraging investors to dive up share prices as they look for yield. But a third ingredient, investor behavior, is also contributing to the bubble forming in stocks right now, according to Dalio. He also said his calculations told him we're halfway to the levels of some historic bubbles and that investors ought to be wary of weak returns in stocks going forward. By measures, the bubble is not of what it was in 2000 and not what it was in 1929, but it's kind of like halfway there. Tom.
Gee, why would I not believe this guy? He started a hedge fund at the age of 26. He's worth $20 billion, and he had the biggest hedge fund at one time. What's the value for him for saying something if there wasn't some evidence? And this guy knows what he's looking for. I believe him. I think the signs are there. Look, tomorrow, here's one thing we all can look forward to. A $3 trillion tax plan that Biden's going to unleash on America. It's coming tomorrow, all the details. Higher taxes is going to be another fuel for this whole thing, for a stock market crash. It's coming. I mean, I believe Ray Dalio. I mean, he's got a 35-year track record of knowing what he's doing and predicting the markets. I totally see this happening.
So what happens if there is a bubble? What actually happens? So, I mean, I fully agree with what he's saying, that obviously there's high liquidity and low interest rates. And the third factor he said was investor behavior. Okay, cool. So if there is a bubble, what's going to happen when this bubble pops? I mean, the bubble popped. We had a 10-year bull run, 12-year bull run going on between 2008.
Great question you're asking.
Okay,
about
so what are we
I'm
talking
curious.
about?
Are you going to say something?
No, I'm saying I'm walking through this process right now. All right, so the bubble popped in 2020, and then what happened? It bounced right back. Okay, so what happens this time? So anything to do with investing has to do with your risk tolerance, with your asset allocation, and with your age. So if you're young, if you're in your 20s and 30s, there's a bubble. All right, cool. Look forward to the bubble and buy low, buy the dip, and just get your investment game on. All right, if you're older and you're a retiree, hopefully you've changed your asset allocation into freaking 70, 80% bonds and limit your exposure into stocks. Is there a bubble coming? Sure. Should you be freaking out? No, you should have a plan to adjust. So also, you got to understand that
some people should be freaking out. Some people should be freaking out. You don't think? You may not freak out. You're 40, but a 62-year-old having 70% in equities, he should freak out.
Okay, but that person should have a plan. Why would you have
not
72% in equities if you're 60 years old?
What are you talking about? Most people, they just have their money in a 401k and they don't look at it. I get that. What I'm saying to you,
but you just said the key word. They don't look at it.
Yeah, of course they don't look at it.
Well, what the hell? That's their bad.
Yeah, I get that. But you're asking what is the worst thing that's going to happen. You said it's just going to come back up. No, it's not going to come back up for the 62-year-old. For the 40-year-old, he's fine.
If they don't change their asset allocation.
If they don't change the asset allocation.
Of course.
You were talking about a bubble in 2019 that rebounded in 2020. That's not what Dalio's talking about. He's talking about something half as bad as the tech crash and the housing crash. He's saying more on those levels as opposed to what happened a year and a half ago.
That's pretty bad. So let's go back to your wonderful question you asked. Ask the question, what's going to happen if there's a bubble?
So what's going to happen if there's a bubble?
It's a filtering process.
Yep.
And I think we need a filtering process. Do you know the whole story with, what do you call it, forest fires? You know the story with forest fires?
Sometimes they set it on purpose to have trees die, to have new things grow.
Yeah, it's necessary. Not you go do it yourself.
Right.
Sometimes nature does it to clean it up because the roots at the bottom could have been stronger, but they were no longer getting the nutrients that they needed because the trees got the sun.
Yep.
They've been covering them up, so now it goes away and then allows for the new people to come back up, right? Okay. There's going to be a filtering process, but some people are going to get hammered. I sent something out the other day where I said the following. I put this on Instagram and Twitter, and I said the next 2 years will produce many accidental millionaires and billionaires. It'll also produce many who rise and fall. We won't know the real players until 2025. The cocky and overconfident investor in any specific area will get clobbered. Stay alert, stay alive, right? People are about to be clobbered. There's a lot of money being spent on things that is being overpaid by a mile. A Michael Jordan car sold for $738 just a couple months ago. You know the same car sold last week for $400,000. Okay, from $738 to $400,000.
So time out.
$738,000.
Oh, wow.
There's 315 of them graded at PSA 10. That same card, PSA, not the same exact card, But a PSA 10 1986 Fleer sold last week for $400,000 and change, okay? From 738 to 400,000 change.
Same card.
Same exact one of the 315 cards, right? What's the point? You have to look at when people are throwing money at things that are not worth what they're worth, but they're just kind of like, I'll overpay. I'll overpay. That whole thing of, I'll overpay. It's okay, I'll overpay, because you have the money to overpay.
Yeah.
People don't say, I'll overpay. Market's about to correct, and the overpay people are going to go away a little bit. So it's going to happen, and it's not going to be pretty. The rates are going to scare the hell out of a lot of people, and Biden's $3 trillion tax plan that he's talking about, they're about to unveil, it will not be pretty. It will not be pretty. Look, folks, if you're listening to this, let's go to a complete different direction real quick. Complete different direction here if you're listening to this. You got to have a real plan on what you're going to be doing in making money the next 12, 24, 36 months, where you position yourself, where you're going to be, what career you're going to be into, what job you're going to have, what industry you're going to line yourself up with, what group you're going to be running with, because it's going to be a 3-year run rate of it getting pretty ugly with taxes. People are going to feel it. Opportunity is not going to be the same. Real estate is at its highest it's been, and there's a lot of realtors, you talk to them, they all sound the same. Guess what they all say? Guess what they all say? The famous line, we don't think the peak is here yet. We don't think real estate is peaking. We think it's high, but we don't think it's peak time yet. Right. We think the peak is going to be 2 years from now. No, the peak is going to be 10 years from now. Meaning, yes, if I'm buying and holding long term, I'm going to be fine, but not the next 2 or 3 years. When the rates come back up, the industry is going to take a hit. And I think Ray Dalio is right. I think the market's going to take a massive hit.
We also got, with Ray Dalio, and you've interviewed Ray Dalio, so you've got some very unique insight on this. I mean, look, I don't want to throw shade at this guy because I do respect him, but ironically, I mean, who does Ray Dalio, is Ray Dalio really concerned about the individual investor out there, or is he thinking about the family offices, the
his clients are the
investors?
family offices? Of
course. So he came out in 2019 in Davos, Switzerland, at the World Economic Forum, and what was his famous line there that came out to bite him in the ass was, cash is trash. Get out of cash. Well, if you're worth $100 million frickin' dollars, yes, diversify and get out of cash.
Yeah.
If you're worth $4,000, cash ain't trash, player.
Yeah.
All right, so just understand when it comes to Ray Dalio, he has a different perspective than the individual person out there worth 20 grand, 50 grand, 100 grand, or even a millionaire. His clients are worth 10, 20, 50, hundreds of millions of dollars.
But he was also talking about an event that's about to happen that potentially could happen to or affect everybody. I mean, I don't think it matters who his, where he's getting paid by. I mean, the bubble's still coming, and that's what he's saying.
So if you enjoyed this little short segment from the podcast that we did, here's another short segment to watch. Or if you want to see the entire podcast, click over here. Take care, everybody. Bye-bye.